Are we muted?
Good morning and welcome to another edition of our Bringing Back Delco series of how we can help you understand all of the things that are happening financially for small businesses, any credits, any opportunities, any questions you may have. And we'll try to answer them today. We have with us Laura Goodrich Cairns from the executive director of the Commerce Center, and Bob Simpson and Krista McCabe from Brinker Simpson. And this morning, they will give you an overview of everything you need to know. Just wanted, by way of information, for any questions you may have, please use the Q&A. Please use the Q&A, and we'll put this in the chat so you can remember not to put them in the chat, so put them in the Q&A. Laura will answer her questions when her presentation is finished, because we don't want her to kind of multitask. We want her, we'll have her answering those questions in the box afterwards. And Kristen and Bob will do it during the presentation. They're going to try to stay on top of that. So if you have any questions, again, if you're just joining us, please put them in the Q&A and we will answer them before the presentation is over. Now I'd like to introduce Laura, who's going to talk about all of the new fun things with the CHIRP program. Laura, thanks for being with us.
Right, just when you thought that recovery programs couldn't get better acronyms, the state of Pennsylvania creates CHIRP. Thanks, Trish. And CHIRP stands for COVID-19 Hospitality Industry Recovery Program. This is a grant program that was legislated in Act 1 of 2021 by the state of Pennsylvania. They allocated $145 million statewide to distribute to counties for grant program to find financial relief to businesses whose primary activity is in NAICS code sectors 721 or 722. That's accommodations, food service, and drinking places. Delaware County is receiving approximately $6.4 million in funding to provide grants to eligible Delaware County businesses through this program. Economic Development Oversight Board under the Commerce Center is going to be the administrative agent for this program for the county. With that in mind, literally by legislation, the only entities that are eligible for this program are hotels, motels. Food service would be your full service, your limited service dining, cafes, restaurants. Limited service would include like your sandwich shops. You would have to operate in Delaware County on or before February 15th, 2020 to be eligible. You must be actually operating in Delaware County. And by that, we mean that if you are registered at your home address, your business is registered at your home address, but you're operating in Chester County, you have a cafe that you operate in Chester County, you have to apply through Chester County, not through Delaware County. We'll get back to that a little bit later. You must also be able to demonstrate a minimum of 25% loss of gross receipts due to the COVID-19 pandemic. Then you also must have fewer than 300 full-time employees or full-time equivalents. Equivalents can be figured out by taking your entire payroll for a year, the hours worked, and dividing that by 2,080. The entity must have a tangible net worth of less than 15 million. The entity also cannot be a publicly traded firm. You must have intent to operate within 1 year of the application. There's a desire to continue operating, and you must be compliant with all laws, including taxation and public health guidance at all levels of government. So state, federal, county, and municipal. Grants will be disseminated in increments of $5,000 up to $50,000. The determination for the grant award is a maximum amount based on annual revenue. Under $100,000 would be eligible for up to a $15,000 grant. Between $100,000 and $500,000 would be a $25,000 grant. Annual revenue between $500,000 and $1.5 million would be $35,000, and anything over $1.5 million would be up to a $50,000 grant. Now, I don't want to get into specifics in terms of how you demonstrate that loss, because that was heavily regulated within the legislation. So we sort of have worked with our Southeast counterparts to sort of reduce the information that we're going to request from businesses to make this case. Essentially, if you were operating in 2019, we need a copy of your federal tax return. That's going to be your full, complete, executed, signed tax return that is, if it's a 1065, it's the entire product. If it's a 1022, it's the entire product for that entity. If you file by Schedule C, we need your entire personal return. And part of the reason for that is because the signature page is on the 1040. It's not on your Schedule C, regardless of which, in order to qualify for this program, you're going to have to upload your entire 1040. In addition to that, we are asking for, from each business, a profit and loss statement by quarter for 2019 and by quarter for 2020 with yearly totals. And that's in order to be able to be compliant with the state legislation for this program. So we're not requesting that you figure out how you are complying with the state legislation. We're going to do that for you by taking those P&Ls and doing the mathematics ourselves internally to be able to justify that minimum of 25% loss. The program also did have some priorities and exclusions. So the exclusions are, of course, that you can't take this money and double dip to the extent that if you received PPP or a Delco Strong grant or the PA Main Street program, you can't take the funding from this CHIRP program and pay for the same operating expense that you did with those monies. But you are eligible to apply for this program and are eligible. It does not restrict you if you have received other CV-19 relief funding. There are some priority applications as defined by PA Act 1, which include demonstration of 50% loss or greater when comparing 19 to 20. It's also based on how much other relief you have received from the other various programs. And of course, applicants that were subject to closure by the Commonwealth proclamation of disaster emergency in either March of 2020 or December of 2020 will receive priority application. For us, the business age will be a factor in internal scoring, and so will some other priority points, such as how much other relief the business entity has received from other various programs, and the location. If it's considered in a historically disadvantaged district, that will play a part as well. The eligible grant uses, of course, are for alleviating revenue loss and paying eligible expenses incurred between March 1st of 2020 and up to the date of application. Eligible operating expenses are defined as an operating expense, including payroll, non-payroll expense that are both ordinary and necessary. Ordinary expense is one that is common and accepted as an eligible applicant's industry. A necessary expense is one that is helpful and appropriate for an eligible applicant's trade or business. So if you're a restaurant, those COGS that include your food purchases are necessary by trade. The rent that you pay in order to have the restaurant business established is considered to be helpful and appropriate expense, a necessary expense. You may not provide funds directly or indirectly for a dividend distribution, return of capital, or otherwise to owners or partners or shareholders of the business enterprise. The last thing we want is grant funding to go to the owners to pay those costs. The payment of any local, school district, county, state tax, or federal tax obligation, including the remittance of sales tax, hotel occupancy tax, or any other tax obligations, is not an eligible use of funding. And it also may not be used to finance a business project, activity, or location primarily outside the geographic boundaries of Delaware County. The required documentation, as discussed, will be a 2019 tax return, the profit and loss statements, including total revenue and total expense. For each quarter the business was operational between January 1st of 2019 calendar year through December 31st of 2020 calendar year. We want those broken down by calendar years. So if you operate on a fiscal, we're going to just want to see those 2 calendar years. If your business is registered outside of Delaware County, so say for instance, you live in Chester County or Philadelphia and you operate within Delaware County and you lease a property, we're going to want to see your entire lease agreement to establish that the business is operating within Delaware County. The application portal will be open on March 15th and start accepting applications. We are only accepting online through our application portal in order to reduce confusion about where to go, since this is a county administered yet state funding. We are still using the delcostrong.delcopa.org website to facilitate this program as well. This round, we are only accepting documentation in PDF format. And as I'm sure Brinker Simpson can attest to, Your documentation should be in PDF format for a bevy of reasons, including all of the relief programs between last year and those that are coming up this year. We also will have the application open from March 15th at 9 a.m. through April 12th at 3 p.m. And April 12th is where we feel that we're probably going to exhaust funds. If need be, we will keep the application portal open. But at this juncture, we are only guaranteeing review of applications received between March 15th and April 12th. We will be reporting regularly, not only to the county, but also to the state of Pennsylvania on how this program progresses. I don't think I have any other specific details that you will need, but all of the information is currently online, including the application questionnaire questions that will be asked, the required documentation for submission, and also general program guidelines currently can be found and are available on our program website, delcostrong.delcopa.org. Thank you.
Laura, thank you. Thank you so much for that. Now I'm going to turn it over to Bob and Kristen.
So I'm going to share my screen. Okay, are we able to share, Trish?
I believe so. Do you not have the share screen option?
It says host disabled.
Okay. Jacqueline,
Here we go. I got it.
Okay.
Yep.
Thank
you.
All right, thanks. Thanks, everybody. Thanks, Trish, and thank you, Laura. We enjoy working with Laura and the Commerce Department and the Chamber of Commerce, of course, as well, to get these programs out to the Delaware County small business community, because they are so important for the struggling companies out here. My name is Bob Simpson. I'm the managing partner of Brinker Simpson Co. We're a CPA firm located in Springfield and a strong supporter of the Chamber of Commerce. With me is Kristen McCabe, who is our director of our COVID team for this past year. If you can believe, it's already been a year, but we're coming into month 13, and so far things have become more confusing than they've ever been. We're going to talk today about two things. We're going to talk about the PPP loan number 2, and we're also going to talk about the Employee Retention Credit, ERC. And just so you're aware, last night at 6 p.m., the IRS released 106 pages of guidelines and changes for the Employee Retention Credit. So we're going to try to include as much of that as we can that we understand, and we don't understand a lot of it, but we're going to include as much of that as we can in our presentation today. Both of these programs are very, very valuable for small businesses. Just to go through our slides as we go, the first slide we have is a disclaimer that we're not offering any tax or legal advice. We recommend that you do contact your CPAs and make sure you go through your specific situations with them, because everybody's situation with PPP and with ERC is separate. So a little background on our firm and what we do. Our client base, we've been around for a long time, and our client base is spread out all through the country right now. We've been holding these webinars since last March, and this is about our 27th webinar, and we actually have a national webinar today at 12. Just reiterating, use the Q&A for questions. Please put them in there as we go. We'll answer them as we proceed. This is our agenda for the day. We're going to start with PPP. We're not going to explain any acronyms anymore because it's been a year. If you don't know what PPP stands for, you shouldn't be on the call. So anyway, in the end of December, the CAA, the Consolidated Appropriations Act, came out, and it created PPP2, a second loan for small businesses that qualify, and many of our clients have already received this second amount of funding. There are some deadlines coming up. It was opened up on January 19th for all companies. It made some changes in the program. If you recall, PPP loans had to have 60% of the proceeds used to pay payroll costs, including some healthcare costs, and then 40% could be used to pay other costs. Those original costs, which were mortgage interest, they were rent, transportation, utility, insurance costs, have now been expanded to include many other costs, including supplies for your business, cost of goods if you're a reseller, accounting fees, which is good. The accountant lobby was really strong in that one. So there's a lot of expenses involved in there, and people might say, well, why is that important if I've got enough payroll to cover my loan? Well, you're going to find out in the second part of our talk that the employee retention credit is an additional credit that has been revised as of the end of 2020. Original employee retention credit came out and said that if you received PPP loan in 2020, you were not eligible for the employee retention credit. However, the revision that came out at the end of the year now makes those companies that had received the PPP loan also eligible for the employee retention credit. The employee retention credit is a refundable credit based on the amount of payroll that you have. And we'll go over the program for 2020 and the program for 2021. But what's very important here is that if you have not done your forgiveness application on your first PPP loan, hold on, don't do it yet until you learn about the employee retention credit. That's the best advice that we can give any business owner in the area here is don't rush to get your forgiveness in there. If you spent your money in the right direction and you qualify for forgiveness, you will be forgiven. Many of our clients have already applied for forgiveness, but they are only the clients who don't qualify for the employee retention credit. But let's talk about PPP2. This program, to qualify for it, here's your eligibility. You had to have a first draw loan. Can't employ more than 300 people. And you must demonstrate that your business receipts were reduced in one calendar quarter of 2020 over that same calendar quarter of 2019 by 25%. Any quarter, any one quarter will qualify you for PPP loan number 2. So if you had one bad quarter and you had 3 great quarters, you still qualify for that loan mathematically. Now, you do have to fill out some attestations as to why you need that money to continue. And if you had some, if some companies were up for the year but down for a quarter, you're going to have to come up with a good story to tell the SBA that so that you do qualify for that loan. And you do attest to those circumstances. It's a very important attestation. When you go to ask for forgiveness of that loan, you're telling the SBA that you've used the loan for all of the purposes here. We have one particular client who filed for forgiveness in December, and his loan was about $850,000, and he got selected for audit by the SBA, and he's in the middle of this audit right now, and it is it's an overbearing audit for them. They have asked for tons of documentation to support the forgiveness application, and the very first piece that they asked for was a narrative as to why they needed the money. Why did they attest that the business needed the money because of economic uncertainties? And if you go back and you look at the definition of what determined what an economic uncertainty is, it's very broad. And anybody that can tell me that they did not suffer from an economic uncertainty last March or last April when they applied for that loan is smarter than all of us in the room, because not only do we have economic uncertainties then, we have them now too. We do not know what's going to happen this year going forward for any of our businesses. So be very careful on the PPP forgiveness when you get to that point, and we'll talk about it. But here's the eligibility, and here are the maximum loan amounts for the second loan. So the maximum draw is $2 million, or it's 250% of your average monthly payroll costs from either 19 or 20, whatever gets you the largest loan. You can use either one of those 2 years. For hotels and restaurants, like Laura referenced in her new tax credits, anybody with a SIC code of 72 can do 350% of their payroll costs. So you get a 40% increase in the loan amount as compared to the first loan amount. So make sure if you're in that 72 SIC code, make sure that you are getting the higher amount. And if you should be a 72 SIC code and you're not, call your accountants and rip them apart, because we saw some businesses that had different codes on their tax returns that should be in the 72 code. It's going to be difficult for them to explain to SBA and explain to their bank why their code was wrong. You also have, with the new PPP2, there is an opportunity to go back and fix your first loan if any of these 2 criteria happen here. So if you are a partnership or a limited liability company, and you did not include your partner comp or your partner guaranteed payments for the first loan, you can go back and fix that loan in this round here and get your first loan adjusted. Or if you had seasonal employees and there were problems with the seasonal employment computation, you can go back and fix it as well. If your bank made an error on the amount of money that they lent you, or you made an error on the amount of money that you applied for, and you were due for more money, you cannot go back and get that money on the first loan. That was a thought when this came out, that it would get fixed. Let's move on to caution. Where'd caution go? Oh, there it is. All right, so the deadline is March 31st to apply for PPP2. We have some problems with that because, first of all, it's 4 weeks away. And if you haven't applied for it, there are some things that came out. Some of the banks are establishing their own cutoffs. Bank of America sent an edict out the other day that they will not accept applications after March 9th for forgiveness. So if you're a Bank of America customer, you better get your application in for forgiveness now. Pay attention.
For the application.
For the application. For number 2, I'm sorry. Yeah, for the second loan, I'm sorry. BOA wants your application by March 9th. The PPP2 program shuts down on March 31st. We do believe that there'll be an extension to that, but as of right now, there is none. Pay attention to your deadlines. Lenders closed forgiveness portals may not intend to reopen until mid-March. So if you don't have your information together, even if your lender is not accepting it, please contact your lender. This is Love Your Lender year. And make sure that you're on a good footing with your lenders and they know that you're going to qualify for this second loan. This is only if you qualify for the loan.
This is forgiveness based, actually, though.
Okay.
So the 8-week period.
Yes, the 8-week period. When you do your forgiveness of these loans, you can pick a period when to have the loan forgiven. It goes from 8 to 24 weeks. Similar to the first round, but you kind of pick the period as you go. And if you're done at some point in time, you cut the loan off and you go for forgiveness at that point. Be careful on your applications. SBA mistakenly has rejected many applications, indicating that the owner of the companies were felons. We got that back. We also got back that the SBA was rejecting applications because they did not agree that the EIN that was being submitted matched the company. Look, this is a massive program. There are going to be hiccups in this. And the only thing that we recommend is you got to be persistent and you've got to be consistent and make sure that you're with your lenders. Make sure that your lenders are your best friends because they're the people that are going to help you work this through. We need guidance on the forgiveness program. We need guidance on PPP2. We don't know how much guidance we're going to get. The SBA will not forgive amounts that are in excess of what the borrower was eligible for if there was an error. So if you borrowed more money than you were eligible for, and we have clients that did that, that will not get forgiven. That will be turned into a loan. So be very careful on your applications.
Can I just say one thing?
Go ahead.
So
Say it to the camera.
the 8-week issue is if you're trying to apply for forgiveness for 8 weeks from the PPP1, your deadline could be right around now if you were early. And if your lender did not reopen their portal yet, you're going to be out of compliance with your loan and they're going to convert it to a loan and you're not potentially going to be able to apply for forgiveness. We saw that happen with one client. So if their deadline is now and the bank closed the portal for 2 months, you're going to end up having to use more than 8 weeks, which may put you in a position that you didn't plan for with a loss of FTE or salary reduction. So keep that in mind, keep in contact with your lender. We've reached out to the SBA for guidance on that. And if you have questions on that, just reach out to us directly.
So the forgiveness is 10 months after the end of your PPP period, which was an 8-week to a 24-week period. So if you ended your period, if you got your money in April and you ended it in 8 weeks, your 10-month period is coming up. That's what we're talking about. So you got to be very careful with those deadlines. And if your bank has closed its forgiveness portal, which many banks have, you got to make sure that you're on top of it with the bank. So let's talk about forgiveness. If your loan is less than 150, this is your forgiveness is a streamlined 2-page application. You provide some information, but you normally don't have to provide paperwork. Some some banks are requiring some paperwork with their applications, and some banks have sold off their PPP program to, we'll call them loan broker groups. And those groups who may not have your first round of information can ask for information as well. It's frustrating, but again, this is a very valuable process to make sure you're persistent and consistent with. Remember, PPP money is forgiven and it's tax-free. So you tell me another time in history when the government has done that for small businesses, and I'll don't know what I'll do, but I've never seen it before. So work your way through the process and make sure that you follow all of the steps. That's forgiveness. Move on. All right. There were a couple changes that the president made that just came out last week. So Biden, in his proposal now, has closed off a period from 2/24 to 3/9 that the SBA will only accept applications from businesses with less than 20 employees. You can still apply through your bank and get your forgiveness application in, but the SBA will not consider that until after March 9th. Also, Schedule C filers, sole proprietors, who calculated their first PPP loan based on net income as opposed to gross income, can now go back and do their PPP loan based on gross income amounts reported, not net income. You're still at the limit of $100,000 for PPP consideration. So your loan maxes out at $20,833 unless you're in one of those 72 code companies, but your loan still maxes out at $100,000. But if your net income when you first applied was less than 100 and now your gross income is over 100, you can, on this second loan, you can go back and apply for more money on the loan. Sole props, independent contractors, and self-employed individuals can get more money. Elimination of the restrictions that prevent small business owners with prior non-fraud felony convictions or delinquencies on student loan debt. You can still get PPP loans. And there are some provisions for non-citizen business owners now who can get PPP loans as well. This was part of Biden's new plan that came out. So just be aware of that. If you're a sole proprietor and you didn't get the full loan the first time, the second time around, you can get more money. So make sure you reach out to us. All right, we want to move into the Employee Retention Credit, ERC, and what that is. The Employee Retention Credit, as it first was introduced last year, said that if a business had an income reduction of 50% or more in any quarter of 2020 over the same quarter of 2019, they were eligible for the ERC. And what the ERC was,
Or shutdown.
or yes, okay, there's a very important caveat to that. If your business went down by 50% in 2020, you were eligible. However, the change came in and said that if you were closed by any government statute or any government action, if your business was shut down fully or partially due to a government action, you didn't have to measure your reduction in income. You were automatically eligible for the Employee Retention Credit. So if you're in a restaurant or if you're in a gym or if you're in a car dealership that was closed for periods of time, any business that was closed by government, you automatically qualify for this credit, both in 2020 and in 2021. It is a retroactive computation that you can go back and get it. Remember, the first criteria was anybody that got a PPP loan was not eligible for this Employee Retention Credit, and most companies got PPP loans. It was easy money, it was fast, it was tax-free. So if you had the PPP loan in there, you weren't eligible. Now that has been removed, so companies can go back and look at 2020 for the whole year of payroll, and if you meet one of those two criteria, either you had a quarter that was down 50% or you were closed by a government action, you qualify for this credit. You can read some of the wording on here on what it is, but let's go to the next page, and it says, am I eligible? And that page will tell you, you got to move one more page. There we go. 50% reduction in revenue of one quarter of 2020 over 2019, or a 20% reduction in the fourth quarter of 2020 over 2019 qualifies you for the first quarter of 21. So if you had that 50% reduction in 2019, or you were closed fully or partially by government order, you qualify in 2020. If you meet any of those other two criteria, and look, the 50% reduction has been downgraded to only a 20% reduction in revenue, 2020 over 2019, or a closure, you qualify for this credit in 2021. And it's a very lucrative credit. How much can you get? Let's talk about the eligibility due to full or partial suspending of operations. You can read what that means here. You're partially suspended if a government authority imposes restrictions on your operations. The orders limit the employer's operation of its typical operations. All three of the above tests must be met. So the orders limit commerce, travel, or group meetings. Group meetings is very important. We have clients that were in the research business, and they used to do research studies of groups. Groups couldn't meet anymore in that industry, so they qualify automatically for this credit, regardless of what their revenue reduction is.
Well, they did, the nominal thing was defined last night, and it had to have a nominal impact on your business, which was defined last night as a 10% either revenue reduction or labor hours or other impacts.
So you needed that 10% reduction. Here's the difference between what was in the CARES Act and what was in the new act, the CAA of 2021, when it comes to the employee retention credit. And if you look at the maximum credit, this is what you can get. $5,000 per employee, a 50% of maximum of $10,000 of wages per year. In 2021, you get $7,000 per employee, which is a 70% of $10,000 qualifying wages. That's per quarter, per first quarter and second quarter. So your maximum right now is $14,000 per employee in 2021, where it was $5,000 in 2020. There is talk of extending the ERC for the next 2 quarters of 2021, which would give 4 quarters of credit. I don't know if they're going to make a $7,000 per quarter credit, which would be tremendous. You get a $28,000 potential credit for every employee who makes $56,000 or more in 2021. You'll see the revenue reduction we talked about. Government order, there's no change there. Employee threshold is very important. Any companies that had over 100 employees in the first CARES Act were not eligible for last year's credit. So if you are a company with over 100 people, you're still not eligible for last year. However, you will be eligible for this year, assuming you have less than 500 full-time employees. This is a very large credit. We just completed some applications for clients that are getting 6-figure and 7-figure credits back on their from their payroll taxes. All right, these are some of the rehash of what we talked about. And one of the reasons that we want to be very careful here is because the payroll that's used for the employee retention credit cannot be the same payroll that's used for the PPP forgiveness. And earlier in our talk, we talked about, and this is the most important part of this program, how do you get both? Earlier in our talk, we mentioned that it was very important to not send your forgiveness application in for PPP yet until you find out if you're eligible for the employee retention credit. So the first step at the bottom of our special rules there is, number one, find out if you're eligible, if you meet the eligibility requirements of either the reduction in income or in the shutdown by government order. If you are eligible, you've got some very complicated computations to make to determine how you can get maximum ERC and 100% forgiveness on your PPP loan. The PPP forgiveness, 60% of your PPP loan must be spent on payroll costs. If you're getting an employee retention credit, you want to make sure that you don't go above that 60% on your forgiveness application. Some clients have already sent their applications in and they used 100% of their payroll for forgiveness because that was easy. It was easy to document. It was easy to support. Now they come back and find out that they could have qualified for this employee retention credit they apply too early for forgiveness. So if your forgiveness deadline is not pending, step back, make the computation, and then figure out how you can get the maximum of both of these credits. Let's move on. All right, this is the 2021 credit. So far, the effective date runs for the first and second quarter of 2021. There is legislation pending that will extend this program for all 4 quarters. The threshold for employees have been expanded from 100 to 500. The receipts reduction went from 50% to 20%, much easier to qualify. And the credit has been increased to 70% of 10,000 wages per quarter for the 2 quarters, as opposed to 50% of 10,000 wages for the whole year of 2020. You have an option to elect to satisfy the gross receipts test by looking at the immediately preceding calendar quarter and comparing that quarter to the corresponding quarter of 2019. So if you're going to look at the first quarter of 2021 at your sales, you're going to compare those sales to the first quarter of 2019. It's a 2-year look back. If your business was killing it in 2019 and you're not killing it any longer, you don't have to compare to what happened in 2020. You have to compare now to what happened in 2019 for your 2021 first quarter. If that quarter's sales are going to be down by 20%, or if you're still partially closed by government order, this first quarter, if you're waiting to get the remuneration, you can do the computation when the quarter's over. Take your employees, do the $7,000 max per employee, 50% of wages for the quarter, and apply at the end of the quarter for your credit. If, however, you will look back to 2020, the fourth quarter of 2020 over the fourth quarter of 2019, and you see that you did reduce by 20% or you were closed by government order, you can ask for a prepayment of those taxes for this quarter based on the fourth quarter's numbers. We have completed that application for a few clients and non-clients, and that money can be staggering, and you can get that now. The IRS will wire that money to your bank account, hopefully very quickly. We'll see.
Yeah, so this one has a more immediate cash relief provision, because you can basically connect with your payroll and tell them to turn it on, and they'll reduce your payroll deposits as you go, or to the extent it exceeds your federal payroll deposits, you can request that advance. The retroactive, I think people need to be aware it's probably going to take a very long time to request your refund, but we are starting to do that now because they did last night come out and give us a little bit more guidance on doing last year, but this year it's immediate relief if you're eligible. So everyone should be looking into it.
So you want to maximize your benefits. That's what we're talking about here. In 2020, if you did not claim the credit in 2020 because you were a PPP loan recipient, you can now go back and file a refund claim. Remember, 2020's criteria, less than 100 employees, 50% reduction in sales for any quarter, and what was the third one? Oh, closed by government order. Mm-hmm. So if you meet those criteria, definitely go back, do your sales by quarter, and see if you're under the 50%. If you're over the 50% drop, then you qualify. If you have questions, here's our contact information. Please reach out to us. We have a website that is open at cares@brinkersimpson.com that answers these questions immediately. We have a team that gets on that. And check our website constantly, because all of these changes get put on there almost automatically as they come through. Do we have any questions that we got to answer?
We have one, just if you're using the PPP loan for payroll, can you also use the employee retention credit? And yes, you can, as long as those are not the wages that you're using for forgiveness.
Yes. So you can use both. You can get the credit, but the computation is tricky. So please reach out and we'll be happy to help you with that.
Oh, you know what? And Laura had mentioned that we might want to talk about the loan, the terms of the loan, because it might make more sense for people to convert it to a loan. And I think it's just if you do convert your PPP to a loan, it's a 5-year loan with a 1% interest rate, I believe.
Yes. So if you do not get forgiven and you choose instead to take the SBA loan, that loan has a 5-year repayment period and the interest rate is 1%. So it's a great forgiven piece. It's tax-free as forgiven. And it's also not a bad loan deal in itself.
Yeah, I appreciate that, Bob, because we've heard from a few people who, perhaps had that overextended in their original PPP last year. And we're talking about having to repay that. And it's, you're kind of like, wait a minute, you might want to really consider that, given that it's only 1% over 5 years. And especially in this climate, is that really the sensible thing to do right now, is automatically be paying back that 1%, a 1% loan? It's a great term. I think that was like sort of the gem out of all of this in terms of a lending ability. The other thing I'd like to ask Bob is that the state of Pennsylvania in Act 1, I believe, also included PPP forgiveness as a non-taxable in that Act 1 of 2021, which means that not only is it tax-free at the federal level, but it's tax-free at the state level. Is that correct from your reading?
That is correct. And I'll up you one even better than that, is that the city of Philadelphia followed along as well. So it's tax-free if you're a company in Philly. But you are correct. Pennsylvania is one of the states that has followed the federal guideline to make the PPP forgiven part tax-free for PA as well. Not every state has followed that. So if you're a company filing in different states, some states will forgive and it will become tax-free, and some states aren't. Some states are taxing those proceeds. Actually, Pennsylvania was a state that was originally came out and said we're going to tax it, and immediately took heat from every business organization, and they changed their mind pretty quickly, which was decent.
I appreciate you pointing out the benefits of being a suburban entity as opposed to the Philadelphia entity as well. Thanks, Bob.
Yes, thank you. And
I think there's a couple more questions for you in the chat.
Yep.
There are, the other question that came up is the PPP money considered gross income for mercantile tax purposes at the different localities in Delaware County? And it is not part of the mercantile tax return. So do not include it as part of your sales for the mercantile return.
So somebody asked about the 10% reduction in receipts that we mentioned for employee retention credit, and I'm texting Tom Saris, who's on the panel, and making sure my understanding is correct, because this is included in what came out last night. The word nominal is not listed in the ERC legislation, but in the FAQs that the IRS gave out later, they mentioned a nominal impact on your business, which none of us really knew what that meant. So they last night said a 10% change in your business. So not receipts, but it could be a 10% change in the hours. That's like just the two examples that probably make the most sense, but nominal impact on your business means now 10% change in some way. I don't know how you're going to prove that, or what they're not asking for this, but that's what they've defined nominal as. So it could be a change in your hours worked too.
And that's for partial closures done by government order. So the government order said if you're partially closed, or if you're unable to have group meetings, for instance, you would qualify for the ERC, and that's what the 10% reduction is. Nobody knew what partial closures meant. What impact would I have? And last night they came out with this 10% threshold that we don't fully understand yet, but
yeah,
hopefully we will.
I don't know what he's saying. 10% that would be compared to the 2019 revenue, just for reference,
right.
And that would be the base year. And then,
so if your company was not able to pivot into a remote working situation, you didn't have the capacity to do that, and you wanted to take that as a cause was a government order to have to work remotely, your business would need to be impacted by 10% to use the government order as the reason that you qualify for employee retention credit. If you're down by 20% this year or 50% last year, you qualify as well, regardless of your government order.
Yeah, okay. And if indoor dining was more than 10% of your receipts, then you would be impacted because you're shut down by X percent. So restaurants, it's a pretty clear case.
Yeah, so if you're in a restaurant business, or you're in a health in the gym business, or you're in a salons, or any of those places that were closed by statute, you qualify for this employee retention credit, regardless of your recovery. Somebody asked, are the programs impacted by the 2020 tax return, which is due soon for LLCs? The programs, most of the programs, if you look at the criteria, are based on a separate quarter of income. If your business was down in 2020 by 50%, you certainly had your quarters down by that, and you're able to prove it much better if you have your tax return done, as opposed to giving bank statements and internal reports that would show your decline in business. So if you have your taxes done and you're down by 50% for the whole year, then you certainly qualify for the employee retention credit. Now, in order to get the second PPP loan, your business had to be down by 25% in any quarter last year. So if you were down by 25% for the whole year, you certainly qualify. One quarter would have had to been down. So if you have your tax return done and that decline is shown on the return, you can use that to support both your PPP loan and your ERC applications.
And I guess impacted by, and I don't know if you mean will it impact your return, but it could. You could have to end up amending just the way you reduce the payroll taxes if you go back and do a retroactive request for relief. But they may change that and allow you to do something in 2021 to show that, but that could potentially impact the return. But I don't think the return will impact the eligibility.
And Bob and Kristen, maybe you can speak a little bit more to this, but to my knowledge, the only one that has the forgiveness at the moment at the federal and the state level are the PPP program. Not that, because we did Delco Care, we did Delco Strong, we did 3 rounds in 2020, and by mandate, we were told we had to send out 1099s for all of those awardees. And I believe that's the same for the PA Main Street program. Can you talk to that a little bit? Because there are other additional programs, grant receipts that went out that I think are still being treated as revenue at both the federal and the state level, correct?
Yes, you are correct. And my clients who did get grant money through Delco Strong did receive 1099 forms. And that income is taxable for the federal government as we speak today. It is tax-free in PA, however. So you have to make sure that your accountants are aware that your federal income is going to be different than your state income by those amounts. We're surprised that the federal government is taxing them.
Yeah.
And I just don't know if the lobby was strong enough to get that removed. But I think with a good push, they would change the rules on that. Yep. So, don't rush to file your tax returns, I guess, is some of the advice that we're giving, because these things may change. Also, if your PPP loan was not forgiven by the end of the year, which most weren't, but you do anticipate that loan will be forgiven, you can show it as forgiven when you file your tax return. It's not taxable either way, but as a loan for some S corporations, don't want to get too technical, but as a loan, it does not increase shareholder basis in the corporation, but as forgiven income, it does increase their stock basis. So if they have loss issues they're dealing with, by having that loan marked as forgiven in 2020, might increase their basis and allow them to take expanded losses in S corps.
And with the tax of that, the SBA is making some SBA loan payments, and I think maybe 2 months ago, the IRS came out and said they were going to tax that, and lenders are required to issue 1099s, and then they just recently changed that to make them not taxable. So potentially, and I guess the banking lobby is stronger than the Delaware County Chamber lobby, but so that could potentially change, but at this point, that's how it's treated.
Yeah, and one other comment in that same vein, Laura, is if you receive the employee retention credit money back, you need to deduct that money from your payroll costs. So you can't deduct the credit amount and receive the credit, which is tax-free. So when you do the tax effect of that tax credit, if you're a 30% taxpayer, you're going to recognize 70% of that tax credit as true cash. 30% of it is going to be go back in tax to the federal government, just so people are aware of that. They're not getting a double dip there in credit and deduction like you do with PPP.
Still an overall better scenario than what we thought we were going to be facing in fourth quarter of 2020. Thank you for that. The only other thing that I'd say, folks, is that for those of you on the call that are in the hospitality industry, the accommodations or the food service, just there is a lot of overlap between these federal programs and this Pennsylvania CHIRP program. To make sure that you do take the time, that's why we publish the guidelines in advance, to make sure that you do understand what is there. We do also have a help desk via email to be able to answer questions. But there are questions within the application questionnaire that we ask specifically in addition to the attestations so that we are compliant with the legislation. And so, for instance, telling you that you can't use this money to pay taxes is because you literally cannot use this money, if granted, to pay taxes, but we are asking you what you use the money for. So that's just a little bit of insight there for you.
Back up there.
There-
Hey, Laura, there's a question in the Q&A about SBA 6-month payments there.
Yes, so they did come out with a new round of SBA making payments. I think if it was in existence for 2020, that there's a new, I think it's 3 months. And then if you are issued a new loan after that September 30th date through a certain time period, then you would get an additional 6 months of payment. But we can confirm that and make sure that Trish has that as follow-up to this webinar.
And just to follow up on that, Lauren, there is those payments are also declared to be tax-free for any loan holders that are having the SBA make those payments. About a few weeks ago, government came out and said those payments are tax-free as well, interest and principal. Great to be in business.
And then Charlene says, can we download this excellent talk as we can't write this? Charlene, the chamber is awesome at making sure that they do post these webinars, post webinar on their Zoom channel, and they do send out updates on their social media as well as through their blog about when they are posted. And they do it fairly quickly after the event. So yes, you will be able to review this again.
And if anybody wants to reach out to Brinker Simpson directly with any questions, you can email cares@brinkersimpson.com, and we have a team of people working to answer those questions as quickly as possible.
Great.
Thank you for having us, Trish. It's great.
Thank you for being with us today. Thank you for sharing all this information. And Laura, thank you as always for giving us that plug. As Laura mentioned, we will have this up on our YouTube probably by early this afternoon. And we will also send it out as a email recap of the event today. So you'll have it right in your email, or visit delcochamber.org and you'll have the links to get to the YouTube channel and the resources that everyone talked about this morning. So thank you again for tuning in. Thank you for using us as your resource at this point. Hopefully we can continue to navigate this together, and soon we'll be back to normal and back in person soon. So have a great day, and reach out with any questions or information that you may need. Thank you.